All right, another earnings season kicking off today, and to give us an inside look at what to expect, and to talk about markets at record highs, Global ex-CIO John Maier. John, welcome back to the couches.
Thanks for having me.
So let's just start with the market right now. Yesterday or last week, we kind of got that melt up that some people have been looking for. All the milestones, S&P 3000, Dow 27,000. When you look at the market right now, what do you make of just what we've seen in the last couple of weeks?
Well, it's hard to buy into a market that's at its top. But the fact is that you don't bet against the central bank. I think I was talking about this last time I was here. We're expecting the Fed to cut in July. The futures market says there's a 100% chance they're going to cut. I expect 2 cuts, not 3 cuts this year. That's certainly going to propel markets. Also, if you look around the world, central banks are ready to support and provide liquidity where necessary. So I think it's tough to bet against a central bank.
Now, thinking about earnings season, might not be that good. FactSet looking for an actual decline in second quarter earnings. You note that the comps compared to last year are going to be pretty tough. But do you think investors right now are actually focused on earnings at this point in the cycle, or is the next quarter just about what the Fed does, and we can look back and figure out what the profits look like later?
Well, I think it's probably more about what the Fed does, but if you look at 2018, earnings were up 20%. And why were they up 20%? They were up 20% because of the tax cuts. That has already filtered through. So I think it's pretty logical to expect earnings to be flat or slightly decline. But if you have that much liquidity coming into the market from the Fed, I think the markets will, at worst, stay flat. At best, go up 6-7% for the remainder of the year. So there is some upside from here.
It's interesting, John, how we're talking so much about the Fed, because for a while the talk was all about trade, and of course that issue is still hanging over everything, the U.S.-China trade tension, and yet, thank you, Jay Powell, as the sort of joke that Miles likes to make goes. But you wonder at some point if the conversation will shift back to trade, either because of something positive or something negative. I mean, what do you think the chances are, either that A, as it goes on and we don't get a deal, markets take a hit from that, or if we do see a deal, will there be maybe the huge spike everyone was once expecting, or maybe not anymore?
I think there's a little bit of apathy at this point. So, we saw China's GDP numbers were basically flat and lower than they've been in quite some time. Mm-hmm. But if you actually dig into those numbers, there's some actually good numbers. Industrial output was good. Retail sales were pretty good. So China is also there to stimulate their economy as well from their central bank. Now, in terms of how the market's going to view a trade deal, well, I think it'll be positive, but I think it's going to be back and forth for quite some time before we really see any clarity.
All right, John Maier with Global X, thanks for joining us.
Thanks a lot. Appreciate it.
Thanks, John.